Hello, investors and traders, and welcome to the weekly market report. I'm Magee, and this is a one-year daily candle chart of the Invesco QQQ Trust, ticker symbol QQQ, tracks the tech sector. And if you're following along with me each week, you'll know that I leave my lines on the chart from the previous week to see how the forecast worked out. And as I zoom in here, you can see that last week I said we would most likely move up in an attempt to fill this gap and then pull back. Now, we did that earlier in the week, but we didn't quite fill that gap all the way. We did pull back, as I expected, but look what we have right now. That is a bullish engulfing candle. As I zoom in there, you'll see that we have a long green candle that engulfs the previous red body. And in addition to that, if you look down below, you can see that the CCI is now turning back up. So I'm going to keep that gap fill target in line right there. I'm not going to move that, but I am going to erase these lines as those are now old. I'll draw my new line up to a level where I think it'll be fairly safe as we make a move to try to fill that gap. But my upside target for the Qs is 293.18, 293.18. Now you have to be really careful because next week is a short and trading week. The week after that, I do believe we can see a continuation of upside, but that does not change my longer term outlook. I'm still extremely bearish to the downside. I've mentioned downside targets over the weeks and months now being closer to the March 2020 lows, and I think that we will ultimately get there. But there will be some short-term opportunities. If you decide that you're going to try to play a bounce because of that bullish engulfing or whatever it may be, you have to be very mindful of the downside support levels, which right here, as of yesterday, that was a gap fill support level. So if you're going to trade the Qs or anything like the Qs, you have to make sure that you're placing your stops below key support levels. That's just a little trading tip there for those who are more along the lines of swing trading as your strategy. All right, let's take a look at SPY. This is the S&P 500 ETF. And you can see that we do have an official pivot point. Today we have a higher low, higher high. I'm going to keep that target in place. I'm not going to move that 399.49. You can see down below as I magnify that, what happened to the CCI? Well, it crossed back up over that momentum line. So that shifts the momentum to the positive side. Now, I do think there is a shot to fill that gap. If you trade in the S&P, keep an eye on that low from yesterday. That's a key support level. If you want to give yourself a little bit more room, you can go down here from the 17th of June and put your stop somewhere below there. Now, the VIX, as we all know, for the most part, is inversely related to the S&P. And last week I said we would most likely go down. We did that. I came within pennies of hitting my downside target, and then we bounced right back up, hitting my upside target. So this VIX right here is basically old news now. I'm going to erase that line and that line. And I want to draw your attention to this big, long red candle right there. Let me magnify that for you. That's known as a bearish Marabuzzo. It's when you don't see shadows above or below the candle. And that is one of the most bearish candles you're going to find on the board. And therefore, I think that the VIX could actually go all the way down to this level to test that support level down there around 23 to 24. Let me make that a little bit more accurate to the penny. Downside target of 24.03 right there for the VIX. The CCI is still going lower. You see that? So the momentum is still going lower, at which time I do think we'll see some activity here at that support level where ultimately we could bounce. And if you look at my timeline, where does that low on the VIX bring us? Well, it brings us very close to mid-July. See this down here? If we hit that, that's right around July 15th. So that's perfectly timed with what I said before, with a possible rally in the general markets next week and maybe the week after that. But after that, watch out below, folks, because I think the overall markets in general are going to hit resistance, hit it hard, and then we could be off to setting new lows. Remember, the Fed is going to be convening right around the middle of July. It could shock the market, surprise the market, maybe not disappoint the market, whatever. It's most likely going to move the markets, and therefore that timeline is absolutely perfect for the VIX. Again, my downside target for the VIX 2403. Look at the data box and you'll see that date there of July 12th. So that is the VIX. If I take a look at the diamonds, ticker symbol DIA, this is the Dow Jones Industrial Average ETF. We did not get up to fill that gap and pull back, but I'm going to leave that right in place. I'm just going to leave the upside first so we can carry that on over. That upside target is 321.97. We do have an official pivot point here, higher low, higher high on that candle. And again, the momentum is starting to shift to the upside. So not touching that whatsoever. Now remember, if you're following my gap fill rules, you'll know that 80% of the time gaps fill. And then 80% of the time after they fill, prices tend to reverse. So if we fill that gap, we're most likely going to pull back. The same is true for gaps to the downside. Remember, here we had a gap. See that? And on Thursday, what happened? Well, it filled the gap, and now we're starting to see the pivot point. It's a very reliable way of trading. It's not 100%, but you got that 80-20 rule where, again, here was an upside gap back here. You see that? Upside gap, 80% chance it will fill. It definitely did that. And then what happened after it filled? It reversed. So if that's something that you want to learn more about, you can go to Market Rebellion. I talk quite a bit about gaps. I have technical analysis courses that I have through them. I have trade alert services. I'm not going to sound like a commercial here, but you can absolutely contact Market Rebellion and plug into what I do there. I give webinars almost every single day for our members, and we have great discussions about the market and individual stocks as well. So again, upside target for DIA is going to be right up there for 321.97. And let's keep that in place as we look forward to this 3-day holiday weekend. Now, IWM, this is a Russell 2000 ETF, came very close right there on Tuesday of filling that, but it did not hit that target of 179.23. I'm going to draw a line right there at that horizontal line because I do believe we're going to hit that target. And then what you have to do, if we get up to this level up here, you have to keep an eye on the volume, because if we start to accelerate that volume as we hit this price target, which by the way is a gap fill point, we could go a little bit higher to fill this gap. And then again, like I said before, once a gap is filled, then it turns to resistance if this upside gap is filled. All right, so again, keep your stops in place, not putting my bullhorns on. I'm still in my grizzly bear costume right now, and I'm still very much long-term bearish to the point where I still believe that we're going to see the 2020 lows right across the board. I keep repeating that because this is turning out to be one of the most documented bear markets probably in the history of charting and chartists. And I want to make sure that we are going on the record from the very first time when I called the end of the bull market in January. And I want that downside target of the 2020 lows to be in place and on the record. Our members hold me accountable. Believe me, when I do a Wednesday call where I do my rapid fire analysis, where every Wednesday I go through anywhere between 30 and 50 stocks, we have scorekeepers actually that track my targets to see whether or not we hit those. And there's a very high percentage of accuracy, especially on that particular call. And again, something that you might want to be interested in if you're looking for trade ideas, Wednesday from 6 to 7, every single Wednesday, I go through this 1-hour session where I analyze stocks that are submitted to me by, through the audience. So IWM, again, upside target is going to be right there. Let me get that number for you once again to repeat, of 179.23. And then we'll have to see whether or not we go all the way up to fill that gap. So please have a great long weekend. Celebrate the 4th of July with your family. Hopefully you're getting a chance with some good weather. Light up the barbecue, hot dogs, hamburgers, good cold beer, lots of great company. Give everyone hugs. And forget about the market for this 3-day weekend, folks. Just relax. most important thing is that you spend time with your family, and then come Tuesday morning, we can get right back into things here with our market reports and our stock analysis. So with that, I want to do one final thank you, and a big thank you, absolutely big thank you to all the YouTube subscribers. Last week, we just came shy of 10,000 views, and we're really ramping that up. And I have all of you to thank for that, because when you like and share and subscribe that video, it gets put on the menu, and the algorithm picks it up as an active video, and lots more people come in, and either through curiosity or they just want to see what their stocks look like, and then they stay in tune with these reports as we go through. If you hit the notification bell, by the way, you'll get the report as soon as it's posted to YouTube. So with that, again, have a great holiday weekend. We'll talk to you next week. So long.
Hello, John Najarian here. If you want to trade like a rebel, if you want to party like a rebel, well, you got to come to RebelCon 2022. It's going to be in Dallas, Texas, at the fabulous Four Seasons Resort. We start the 21st of September, go until September 24th. It will be more fun and more live trading than we've ever done before. That's why it's called RebelCon 2022. We're going to have barbecues and double the amount of live trading. So if you want to book that now, make sure you do, because the guest speakers, as soon as we announce those, this thing's going to be sold out. It's going to be something you do not want to miss. Limited to 250 people. Diamond, platinum, and gold packages are selling out. Sign up now for RebelCon 2022 at the Four Seasons in Dallas, Texas.
Welcome to the rebellion.